China, demand ex-China is also rising, okay? The West imports are rising. Japan imports are rising. I think the rest of the world is catching up to what China's doing. Now, that's really not even investment demand yet. All right. Why is this? Well, there's increased silver demand in solar PV. Let's face it, the West has to catch up, or China is going to own that market. They believe that there is a gold to silver ratio drop expected, 75 or lower. We went down to 75 and went back up to 85, almost 90. The price of silver is higher in China than it is everywhere else in the world, despite what you may hear elsewhere.
VinceLanci, a seasoned trader and respected voice in the commodities sector, offers valuable insights into the current state of the silver market. Lanci points out a notable disparity in silver prices, with China's domestic market commanding higher prices than the rest of the world. This price difference underscores the growing demand and tightening supply within China, a significant player in the global silver market. However, the silver market isn't without its challenges. The metal remains susceptible to economic uncertainties, particularly concerns surrounding the US and Chinese economies. Silver prices are expected to exhibit volatility in the short term due to a confluence of factors. These include a potential slowdown in China, fears of a US recession, fluctuating bond yields, a possible deceleration in the green energy transition, and speculation about US interest rate cuts. Despite these hurdles, Lanci sees potential for silver to outperform gold. He anticipates the gold-to-silver ratio to drop to 75 or lower, suggesting a relative increase in silver prices compared to gold. This prediction gains credence when examining the long-term trend line from 2022, which shows both metals tend to bottom out when the ratio touches a critical resistance line. Interestingly, the gold-to-silver ratio has recently experienced its most rapid one-month increase since the COVID-19 crash in early 2020. This surge, observed in the first week of August, indicates a strong investor preference for gold over silver. As the ratio approaches this resistance area once again, and with silver nearing a crucial support level, many analysts, including Lanci, believe a bottom in both metals may be imminent. This convergence of technical indicators suggests that a price rise could be on the horizon. Please tune in for our exploration of VinceLanci's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
China wants more silver than they have, and there's a chart to that effect. Silver market is in deficit. Bank of America expects the silver market to remain in deficit, with declining inventories making these deficits more impactful. That's an important statement, okay? Shortfalls are nothing new in silver, yet silver prices have been range-bound between 2020 and 2024, averaging around 23.5 an ounce, owing to the piggy bank being raided by bullion banks using it to satisfy BRICS demand. That's me talking, not the report. So you have a market that's not producing enough to satisfy demand, and you don't have available scrap or easily available scrap or easily available recycled silver, however you want to call it. So you start to draw down on the vaults while you look for scrap. And that gives us this chart. Between here and here is the time frame that Bank of America is talking about. Silver dropped. Between here and here, inventory, silver dropped. So once upon a time, they compensated for the shortage in the shortage in supply, fresh supply, by using the vault. I don't think they're able to do that anymore, especially in London. Because they can't draw down the vaults as much anymore, this will increasingly help make the deficits in supply, fresh supply, more obvious, especially as demand is bouncing back too, which brings us to demand bouncing back. China has shifted to a net importer of silver driven by both increased imports and reduced exports, signaling a rebalanced domestic market. What does that mean? Well, increased imports, they don't have any more. They've already depleted their own concentrate, their own silver concentrate as an offload of zinc. And now they're looking for it elsewhere. Latin America is one of them. So now they're importing. They're reducing exports. Now, the export number doesn't matter as much. They export silver to Japan, so Japan can send it back in a different form, uh, powder or paste. So there's a rebalancing of the Chinese domestic market, meaning uh, they don't have as much indigenous supply, so they have to go out for it now. And these charts explain that. The concentrate comment I said, silver, China's domestic silver has tended to be oversupplied, partly because its producers churned out silver as a byproduct at its base. There's less silver byproduct coming out of smelters. You will hear from many people that that is because there's less smelter activity. That is true. There is also less of it to be had because in the run-up starting in May, China was going out to its base metal refiners and saying, pull your silver out now. They've already taken that silver. So there is no more due to scouring reported.
VinceLanci predicts that gold could reach $2,500 in the spot market before the upcoming CPI data release. He bases this on the observed lack of selling pressure in the market, which means only some long position holders are selling to take profits at these high levels. This prediction highlights potential significant movement in the gold market ahead of key economic data. This prediction appears to be gaining traction as the gold market showed impressive strength on Monday. During the mid-North American session, the price of gold rallied over 1%, with gold dollar trading at $2,467 after bouncing off a daily low of $2,423. This surge came as U.S. Treasury bond yields retreated, creating a favorable environment for non-yielding assets like gold. The market's movements occur against the backdrop of a busy economic calendar in the United States. Traders are particularly focused on the forthcoming July CPI report, which is expected to provide crucial insights into the ongoing disinflation process. This report could have significant implications for monetary policy and, consequently, for gold prices.
Gold's new all-time high close. That's a monthly chart. I'll pop it up there for a second. On a monthly basis, it's pretty obviously bullish, okay? But we're not done the month yet. On a daily basis, it may not seem as obvious. I'll show you what I'm talking about. You're like, okay, that's a good chart, but that's the highest close we've ever had. And the fact that they, and by they, I mean the market, and we know who they can be, but the fact that they are not selling it or don't feel confident selling it and are letting it get into a wick above 2 wicks this week, I think someone has a little bit of gunpowder they need to keep in reserve for when the CPI comes out, or is just downright scared. Whoever they are, they're short the market and they're having a hard time keeping a cap on it. So, and as a result of that, yesterday I said on Twitter, X, whatever we're calling it, I said that gold should trade 2,500 in spot by the time CPI comes out, or I'll eat my toupee. It's because I have real hair. I don't have to eat a toupee. I do have hats, so I'm not going to eat my hat. All right. I think gold's going higher, approaching the number because, right? And I don't make predictions because I think this. There's no one out there who wants to sell this market. No one, except longs that are taking profits. So you need to wait for your opportunity to pounce if you want to sell it. Now's not a time to sell it. We'll see. I have a feeling that, well, if the CPI was going to be higher than expected, this market would be already lower as it would be leaked to big players. But we'll see. Oh, here's the daily, right? What did I draw yet? We drew together a trend line, right? I looked at the daily, I drew on the 4-hour, and then I drew it on the 1 hour. This trend line is a good trend line. If we go below it, you probably don't want to buy that dip, but you want to buy dips approaching it. If you need to move the trend line around, that's fine. Another corroboration of the trend line is when moving averages start to corroborate it. I'll show you what I'm talking about. There, this moving average, it's a 50-hour moving average, is now becoming the trend line. So I think this is going to hold this trend line. It's an hourly trend line going into CPI, and then all bets are off. So you should be long. I should be long, not you. You should do what you want to do.
The anticipation of this key economic data appears to be driving market sentiment. If the CPI data shows a continued improvement in the disinflation process, it could further support gold prices. Lower inflation expectations might lead to a less aggressive stance from the Federal Reserve regarding interest rates, which typically benefits gold. Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.